Price action can be incredibly volatile. We've seen the Bitcoin come up and is doing a pullback and now has rallied. This was after a considerable period of consolidation and then a sell down. The question always becomes, what will price do next? If we look at it from this long-term perspective, of course we can see that there's a basic uptrend. But if you get caught at the wrong times, you will freak out and you will sell. This is normal. Financial markets have a habit of pulling people in at one spot and ejecting them en masse at another. People typically look for certainty inside financial markets. Is it going up? Is it going down? What the heck is it doing? This is actually the incorrect way to look at it. Professionals have a very different process. The first stage is to zoom in. We're going to swap from the daily basis down to the 15-minute basis. When we zoom down to this basis, we can see that Bitcoin exploded up, has been consolidating. It looks a little bit weak at the current time. But what is the structure telling us? If we don't look into structure, we simply cannot understand what is going on. Where is the structural support and where is the structural resistance? For example, and what the heck is structure anyway? Structure is where the liquidity is, or where smart money and algorithms will come in and buy, and where they will sell. If you do not know this, you're in a lot of trouble. You're literally in a world of hurt. Why is that? Because typically after a big move, people just FOMO in, and then it goes the other way and they say, oh, I made a mistake, I need to get out, and then they effectively sell the bottom. Now, what's happening with Bitcoin's price at the current time? We saw back on the 10th, we had a lot of positive action through this positive CTKS gap. That is to be expected. We had a structural overshoot on this particular structural resistance level, and we've been seeking to convert that into support at the current time. But what are the values of these particular areas? First of all, Bitcoin is trading at 108,698. This particular structural support level, and it could be support or it could be resistance, it's a little bit early to tell, is 108,914. The key one to actually look at is this 110 level. Bitcoin came up to the 110,000 and has been rejected en masse. And it's been rejected quite a few times. As people bought this big push up, they found that they just threw themselves into buying at the top, this 110,000 resistance level. And fortunately, we knew it was already there. Then price came back and tried to get through it again and again and again and again with no fortunate luck. Now what we're seeing is we're currently around that 108,750 mark. And if we fail to confirm and flip this structural resistance, which it's increasingly looking like, at around the 109,000, if we fail to get above 109, we could see fairly precipitous drops back to the 105,460 mark. In other words, we could actually see this entire move erased. The crypto market is at a pretty important and critical juncture. If it doesn't hold the 109, that is a big problem to crypto, because we could very, very easily come back to the 105,460. Now that's the negative case scenario. What about the positive case scenario? Well, the first step in order for Bitcoin, and of course all of crypto, because Bitcoin has the directional fingerprint of the entire crypto market. When Bitcoin is doing this, the entire crypto market, with the exception of just a few random particular alts, is doing exactly the same. So when you look at the crypto market, this is what the entire crypto market is doing. This is what your beloved alts are doing. Now, if we don't get above the 109, that puts the 105,460 mark into process as a target. But if we do get above the 109, the 110 starts to get onto the radar. Now this is terrific. We can't immediately write off upper boundaries just because price is coming down. You can see here price came up, price came down, just hovered around this structural support, literally teetering on the edge of an abyss of a gap that could just see it thrown down to lower prices and then reverse sharply. The key line in all of the sand in the crypto market at the moment is 110,000. But if you didn't know structure, if you were just looking at a chart without the structural overlay, you would just see this, which effectively tells you nothing. Well, what about putting on a moving average or something like that? MAs, moving averages, EMAs, exponential moving averages, they just basically average out past price. They don't give you all of price history, they just give you recent indicative price. In other words, they couldn't ever tell you that the 110 mark was important. In fact, if you were caught in this particular pump up, you would probably buy it thinking that Bitcoin was going to 150,000. No, it was going to structural resistance. When you mark up your charts with level 1 and level 2 standard certification, you get the most significant resistance and support lines in existence. And you can see they play out every single day. When we do a video, we know structure will be interacted with. It can get a little bit wobbly from time to time, like we saw this action. We're seeing similar action right now, but you must prepare yourself for negative downside action and positive upside action. You get certainty out of your own actions, your own decisions, your own processes. Price waves will not give you certainty. It's your reaction to the price waves which gives you certainty. When people understand this, they're making the transition from apprentice into master. Now, looking at Bitcoin, we've seen this positive CTKS gap filled up, and we've seen the structural underpinning support and structural resistance be interacted with. This is very normal. We see this all the time. Looking into total crypto market cap, it gives us a really good understanding as to where the entire market of crypto is going. So what are we seeing right here? We're seeing a bit of a weakening trend and a consolidating trend. After a big push up in price, it is normal to consolidate. Is it looking the same as Bitcoin is looking? To answer that question, we need to look at the structure over total crypto market cap. We can see a little bit of a different thing. At $3.41 trillion, there is a lot of resistance across the entire crypto market. We sought to get above that and we failed. We had structural failure on the way through, and we've also not been able to pick up these structural passes on lower structural levels. The best traders and investors always take advantage of lower levels of structure because the lower levels of structure are where the party is at. You must manage your downside risk. It's a little bit like you're a scuba diver and you have a very limited supply of oxygen, which is of course your account balance. Every time that you buy high and sell low, you're losing oxygen out of your oxygen tank. Therefore, you want to conserve that oxygen as much as possible and inhabit all of the lower structural levels wherever possible. The momentum for the crypto market is undoubtedly up, and if we don't cross across this $3.41 trillion mark, expect negative price pressure on crypto. Hence, a lot of people say, where is crypto going? All you need to do is to understand Bitcoin at 110,000 has a headache. The entire crypto market at 3.41 trillion has a headache. So as soon as it gets above there, headache fixed, and it can continue on. If you're trading and investing in Solana, which is currently 163.52, you must know where the structure is under the chart that you're looking at. Typically what happens, people draw fairly random lines, and that's why technical analysis has a bad reputation. A lot of people call TA tea leaf reading. Why? Because it lacks science and it lacks structure, until the CTKS method came along. With level 1 and level 2 standard certification, when you draw up your charts, you know exactly where the strong, levels of structure are, to the upside and also to the downside. So the 162.45 level on Solana is a really good level of structural support. And we can see we're starting to get above this level of structure at 163.28. This goes really well for not only Solana, but all other projects in the crypto space. The crypto market moves as a whole, because we're looking at an upward gap up to around that 165.64 level. We could find that Solana just pushes up very quickly. You can take a lot of advantage of these price wave movements. And one thing that our community knows, you don't have to make big percentages to make huge percentages on your oxygen tank, which is of course your portfolio account balance. The critical thing, if Solana starts to trade below around that 162 level, that opens up lower levels, and we're likely to get negative structural attraction to lower levels, for example the 156. Now, what would cause Solana to pull back? The answer is Bitcoin and total crypto market pulling back. Therefore, that's the reason that you look at their structural levels. Let's say that you were trading and investing in XRP. XRP is really quite volatile, so there's a good probability of turning percentages with this. What we see right now is that XRP is under pressure, but we know that's under pressure because Bitcoin is under pressure and total crypto market cap is under pressure as well. But what we've seen here is basically a consolidation action with XRP. But we need to know where the actual structure is with XRP. A lot of people will say the structure is through here because, hey, it came up to there and stopped. Now, the problem with that kind of thinking is it has to come up and stop for you to actually draw that particular resistance line in. When you're doing the CTKS method, which is the world's most powerful smart money buy and sell level detection system, you don't need to worry about price printing. You already have the architecture of the market at your fingertips, and it is rightward looking. Now, what does this mean and how do we use it, especially on XRP? XRP is currently trading at 229.48. We can see overhead structural resistance at that 230 mark and up a little bit further, close to that 232 mark. These are the structural underpinnings of XRP. But you might ask the question, what happened around here? Is there any structure in here? That structure is actually inherited from Bitcoin and total crypto market cap. This is a secret shared within the profiting course and something less than 1% of people know about inside the crypto market. But our community knows this, and if you're new, a very warm welcome. The thing to understand about XRP is a little bit independent of Bitcoin. It won't follow closely like Ethereum in terms of directional correlation. XRP can be very explosive and very implosive. So the key levels of structure to look out for are around that 235 mark. So there is where your resistance is. And when we look at support, we're looking at around that 225 mark. But the only way to realistically understand where XRP is going is to look at Bitcoin and look at total crypto market cap. No matter what crypto chart you're trading or investing in, that it is really, really important to look at Bitcoin and total crypto market cap structural levels first. If you don't look at those levels first, you don't really understand what's happening inside the crypto market. It would be akin to looking at Apple and not looking at the major market indexes, or looking at Nvidia, or looking at any chart in isolation. That is a very amateur move, and it will cost you a fortune. This is one of the biggest newbie mistakes that people make, to only look at the chart that they're putting money into. All charts are intercorrelated and interconnected. When we look at ADA, we can see that it's been moving in a wave-like fashion, up and down, up and down, up and down. Now, is ADA weakening or strengthening? Well, to actually answer this question, we need to look at ADA's structure. If we don't understand what ADA's structure is, we cannot answer that question. What you will find over time is that when you understand structure, it is an absolute game changer. Now, when we look at ADA Cardano, it's currently trading at 70.70. We can see that it's pretty much in smack bang in and around the middle of a negative CTKS gap. Now, is the volatility over for ADA? Only Bitcoin and total crypto market cap can answer that question. You literally need to look at 3 charts for every one chart that you look at. A lot of people simply don't want to do this. They just say, oh, I'll trade ADA by looking at ADA, I'll trade Doge by looking at Doge, I'll trade XRP by looking at XRP. That is absolutely suicidal financially. Please don't do that. Professionals always talk about stacking probabilities, and you stack probabilities by knowing where the structure is. But it's not just the structure that you need to know, you need to understand structure as well. For example, around this particular 72.09 and around that 72.21. So around this 72 mark is a lot of structural overhead resistance. How do we know that it's resistance? Because it's above price. So where the current price is, if you've got these SLs or Stanfield levels or CTKS levels, they're resistance levels. The ones below are structural support. And you can see these ones are fairly light at 69.77 and down a little bit at 69.44. There's another one down at 69.28. But this is really light. This will react with price, but it's not strong like this. These are the strong levels that you want to see, and you want to see lots and lots of confluence as well. From a structural perspective, we can see that ADA is weak. ADA is under the 71.29 structural once support turned into resistance. So until ADA gets above that 72 cents, well, literally around that 71, say 71.43, you want to get over that line. Until that occurs, ADA is undoubtedly in a downtrend. The key to understanding what's happening with ADA is to look at Bitcoin and total crypto market cap. If you're in Doge, it's exactly the same. Look at Doge's structure, look at the structure of Bitcoin, look at the structure of total, and then start to stack probabilities like a professional. Inside financial markets, amateurs get wiped out. Do not seek to be an amateur. Guard your account balance like a scuba diver would guard their oxygen. That means you focus on the downside and not what most people do, which is focus on the upside and listen to all sorts of stories. Something that could help you out when you look at CTKS levels, which are these dotted levels, stronger, thicker, clustered. That's what you want to see. You want to see lots of thickness and lots of clustering. When they weaken out, you form what are called CTKS gaps. And these CTKS gaps we know ahead of time. We already know that Bitcoin has a negative CTKS gap, but we knew it had a positive CTKS gap several days ago. Whenever price approaches these gaps, things can get really, really volatile to the upside and also to the downside. So please be aware of this. And there's a ton of free resources at ctksmethod.org. And you can pick those indicators up here as well at ctksmethod.org. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.